Today, I'm going to show you my top 3 dividend payers that I expect to jump this earnings season. Hi everyone, welcome to State of the Market. I'm Marc Lichtenfeld, Chief Income Strategist for the Oxford Club and owner of this tastefully decorated YouTube set. Today we're talking dividends in the season of earnings. As I mentioned in last week's episode, we're heading into earnings season, that wonderful time of year when companies show us the cold, hard figures.
Numbers do not lie.
If a company's performance outstrips expectations, stock prices can make a big jump in a single session. But the opposite is also true. If you missed last week's episode where I showed you how to play the upcoming earnings season, go back and check out that video. Or better yet, subscribe to the channel and never miss a video again. Subscribing, like love, don't cost a thing. So go ahead and click that big red button. Now, around these parts, you probably know me as Marc Lichten something or the Seinfeld clip guy.
Not that there's anything wrong with that.
But in investing circles, I'm known as the Dividend Guy. I could write a book on why dividends make for such excellent wealth builders. In fact, I did. Twice. But the long and short of it is, dividends reduce your portfolio's risk and volatility, and they pay you to hold them. After years of owning dividend payers, I've gotten used to being treated right. So even when I'm trading a stock for a big move in earnings season, I want to get paid while I'm holding it.
Oh, I like money.
Today, I'm going to give you 3 companies paying out dividends that are likely to beat earnings forecasts this season. Here are my top 3 dividend payers for earnings season 2022. First up is NextEra Energy Partners, stock ticker NEP. This renewable energy company owns interests in wind and solar projects throughout the United States, and it sports a 3.6% dividend yield, but even more importantly, has committed to annually increasing its payout to shareholders by 12 to 15% per year. That should easily keep up with inflation, even in today's high inflation environment. The company reports earnings on April 21st and is forecast to earn 40 cents per share on $340 million in revenue. Should NextEra report a strong first quarter and confirm that giant dividend growth, I expect to see a healthy jump in share price. Oil and gas aren't getting any cheaper, so a company focused on wind and solar energy with a growing dividend should be very attractive to shareholders, especially if earnings are better than expected. My second dividend payer, primed for an earnings beat, may be a surprise: Intel, stock ticker INTC. For the last couple of years, the nerds at Intel have been forced to watch as newer and flashier competitors ate their lunch.
What are we having?
But with an ambitious new CEO and bold expansion plans, Intel has become a dark horse pick for earnings season 2022. I'm not exaggerating when I say Wall Street hates this company. I'm talking Kanye making Instagram posts about Pete Davidson levels of hatred. Only 11 out of 39 analysts rate the stock a buy, which is great for investors like us. When a company exceeds expectations and sticks it to the haters, there is potential for even larger gains. In the meantime, you're getting paid a 3.1% dividend yield to sit back and scroll through Kanye's Instafeed. Intel releases results April 28th. Analysts expect it to report 79 cents in earnings per share on $18.3 billion in revenue. And remember, these are mostly bearish analysts who still think Intel is the skinny nerd at the beginning of the movie. The bar isn't high. I'm expecting Intel to beat those expectations handily and jump in price. Now, my final pick is not a huge dividend payer, but when it comes to beating earnings, it's practically a lock. Before we get to my last pick for earnings season 2022, be sure to click the link in the description below for more hot stocks this earnings season. Okay, back to business. My final pick is Archer Daniels Midland, stock ticker ADM. This company makes food. You know, the stuff I can't go near or else I'll jam it down my pie hole.
Get in my belly!
This isn't a mom and pop kind of operation. When I say makes food, I mean this is a multinational corporation operating more than 270 plants and 420 crop procurement facilities worldwide. The company's dividend yield is just 1.6%, but Archer Daniels Midland has beaten analyst estimates for the past 10 straight quarters. And when it reports earnings on April 26, I'm confident it will make it 11 in a row. Despite its record, Archer Daniels Midland is sitting at the nerd table with Intel.
Gangsters, what's up guys?
Only 9 out of 16 Wall Street analysts rate the stock a buy, but analysts are notoriously late to the party. Parties where I'm usually the first one to arrive, that way I can get to the hors d'oeuvres unimpeded.
Get in my belly!
Anyway, Archer Daniels Midland has a strong history of earnings beats, and you'll get paid a small but growing dividend while you own the stock. Remember, these stocks all have earnings coming up in the next 2 weeks, so don't sit on this information. If you're going to play them, you want to get in before earnings season, which is about to begin. If you want more recommendations for stocks about to blow the roof off of earnings season, click the link in the description. But again, don't put it off. Earnings season begins on April 20th, so you want to make sure your stocks are positioned beforehand. Thanks for watching State of the Market. I'm Marc Lichtenfeld. I'll see you next week.